Hello and welcome to All That Glitters, a brand new show on the most talked about metal in the financial world, gold. We have all heard the story about how India had huge wealth pre independence and how wealthy were you was measured by how much gold you own. Well, time has passed. We are in the 21st century now, and the perspective of wealth has changed. What has not changed is the value of gold. Why the yellow metal is called as the safe haven asset. Even during war and the financial crisis, why the value of gold goes up. What is interesting is while the Indian stock market is hitting record highs in the past few months, even gold prices are hitting record highs. We are here to talk about this and get overall views from experts on gold prices. Jatin Trivedi, VP of Research, LKP Securities, joins us. Hi, Jatin, how are you?
Very good evening. I'm doing good. How are you, Shruti?
I'm doing well, thank you. We are talking about gold as an investment, as an asset, and why it is called a safe haven. From your perspective, let's say, in the past few months, the stock market has hit record highs, and so has the
Correct.
gold. So,
Yeah.
what is your overall view on that?
See, the euphoria totally behind this rally is because of the domestic growth path that the Indian markets are showing. And secondly, some amount of Middle East crisis that is also supporting gold market. And on MCX, we can see the reflection because of the somewhat COMEX, which has, performed quite well because of this Middle East crisis and the global uncertainties concerning the overall interest rate impact, which is still not been implemented as of now, but still the roadmap looks a little bit clear that the 2024 year is going to be the year of global interest rate cut decision making ahead. Not only in US but the overall global markets, whether it be the euro, whether it be the Britain, or whether it be the Chinese market or Asian markets like our Indian own economy. So we will be seeing the aggressive part of the interest rate cuts being implemented most probably into the second half of this new calendar year. So this is what the euphoria and the main support lies for the gold prices as of now on fundamental basis.
Right. So, if you had to pick some of the best investment amongst gold, what would they be?
See, there are varied options available into the market where the investment cycle rolls in on a typical basis from the investment point of view. First and foremost is the lucrative, sovereign gold bond, which gives an additional 2.5 percentage to the investors, even if the market is not moving on the higher side or stabilizing at some of the levels of around 60,000 to 62,000. But at least they have this buffer of 2.5% against the tide if and all the gold prices starts drifting a little bit lower. So they will always have this upper hand to outperform the gold prices as a retail investor. And on the other hand, there is a support of rupee as of now that we have seen this year, that the rupee market has been quite stable. The RBI has been very much in line and very aggressive about not letting the rupee fall too much. So in that terms also, the gold prices have not shown that much of a greater volatility. So if and all the rupee was also depreciating a lot, then the gold prices definitely would have been rising way much higher as of now. But at the same time, some amount of rupee depreciation helps the gold prices in the MCX to rise. But this year around, we have seen that the rupee market has been very stable. But at the same time, we have seen the dollar index also performing, and the gold market has also been performing this year. So all in all, the inflation, higher inflation, what has it has developed is that the market participants have been putting the money in varied classes to keep the position hedged and keep the varied options open, where the market would be finding a good amount of prices, then the prices keep shifting into their investments, whether it be on US dollar or whether it be it on the gold. And the other options which are available in the format of gold that are, as I said, first is sovereign gold bond. Then we have the ETFs available readily for the retail investors. We also have the MCX contracts, which you can, convert it into a physical format as well. So these are some options which is very much competitive to the prices what the jewelries or the jewelers offer to.
Nice. Thanks that you spoke about jewelry. So, this is a known fact that, Indians love gold. So,
Right.
if we not talk about, say, investors' perspective and just household, perspective, do you think that gold jewelry demand
Hmm.
is decreasing amongst a younger generation?
Maybe at some point in time that is correct that the younger generation relies more on fashions, and the trend of fashion keeps on changing time to time. After each and every decade, we see some amount of new fashion coming around, and the jewelry fashion market, starts to little bit give away some of its glittering impressions, because there are readily available artificial facts of getting into the fashionable side, and more designs are available over there. On the gold front, there are some amount of limitations. I won't say stronger limitations, but minor limitations are there when it comes to melding it, and when it comes to making a good amount of fashionable jewelry out of pure gold. So artificial jewelry also comes into the picture, where the fashion comes into trend. But yet again, the younger generation gets attracted towards the ETFs more, because they understand the power of ETFs. They understand the growing strength of keeping the gold on safer basis, and also the sovereign gold bond that we have seen since last 6 to 7 years. It has given healthy returns also, and also 2.5%, as we discussed earlier, that goes into the heads of the younger generation, that the additional 2.5% is always going to help you, because on the compounding basis it gives you a very strong return eventually. So yes, I would strongly agree with you that the younger generation keeps on adding towards the less interest towards the physical gold, that is for sure. But since the pandemic that we have seen ending, there have been a lot of wedding ceremonies and wedding to be taken place. So this year around, there is going to be a almost 20 35 to 40 lakh odd numbers of weddings being registered. So this is also going to impact the gold physical demand, I think, and because the wedding is the main event where the gold purchases goes very relatively higher. Even if the prices of the gold are at higher levels, the wedding is one function which one does not ignore to buy fresh gold. So definitely, I think the physical demand in India this year is going to be a little bit different. The numbers will start reflecting soon, because we are into this wedding season as of now, as we keep on progressing towards February and March. So yes, I think this demand will pick up because the prices are stabilized as of now, and that has always been the picture of physical market. Whenever the gold prices starts to stabilize, that is the highest peak time that the physical market starts to develop, because retailers get attracted towards physical gold when the prices are stable and not trending on the higher side, because they wait for the prices to stabilize or correct, and then they start entering it.
Thank you so much, Jatin. Let's just keep a watch if gold keeps glittering or not. That was Jatin Trivedi from LKP Securities. Thank you so much.